Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by CommerzVentures managing partner Stefan Tirtey. Great to have you with us, Stefan.
Hello, Elliott. It's great to be here.
Okay, so before we get cracking, let's learn a little bit more about CommerzVentures. Okay, so you're a fintech-focused fund. You are independent, but I think your main or your only backer is Commerzbank. Tell us exactly how it works.
Well, that's true. We're an early-stage specialist investor focusing on fintech and Insurtech only. It happens to be a single LP fund, but not to be mistaken as a strategic investor. We have a clear financial-only mandate, and our sole backer happens to be Commerzbank in Germany. It's an arm's length relationship where actually the management company that manages the fund is owned by my co-managing partners and I, and Commerzbank happens to be our LP.
Okay, and you've got, I think, 550 million euros in assets under management after a recent fundraising, I believe. Give us the investment highlights and perhaps some performance stats.
That's correct. We started off in 2014 with a 100 million fund, then raised a 150 million fund in 2019, and just launched our third fund at 300 million. We've backed about 30 companies to date, all in fintech and Insurtech. And more recently, we also added investments in a space called climate fintech. In terms of notable successes, we were early backers in companies, including Marqeta, the leader in card issuing processing, in Mambu, the leader in cloud core banking, in eToro, a super international, very large broker, and also in Bought by Many, a UK business.
Okay, and I know that this hasn't, of course, been the easiest period to be a fintech investor, at least 2022. When you see sell-offs in public markets and falling valuations, both in public markets, of course, and I suppose to a degree in private ones, do you think yikes, or do you think great investment opportunity?
Both, actually. We happen to be an owner of a significant portfolio, so there are certain challenges that come along with a strong market correction in that, in terms of availability of follow-on financing and so forth. On the other hand, we've been operating in a very frothy environment over the last couple of years when it comes to valuations and fintech. So it's a double-edged sword, and I think right now the market is still sort of sorting itself out in terms of valuations, investment speeds, and so forth.
Okay, so we've heard a little bit about CommerzVentures. Let's now get to know Stefan a little bit better. So, Stefan, you founded CommerzVentures, I think, in 2014. How did that come about? Because, as you say, I think in the beginning it was part of Commerzbank, but then it became independent. How did this VC come about?
Well, Commerzbank on its own formulated the idea of starting a corporate VC and approached both my now co-managing partner and I, Patrick Meisberger, about running the fund for them. And we were both actually very skeptical because we felt the last thing the world needed was yet another strategic VC. And we were so skeptical that at first we both declined. It turns out that Commerzbank had done its homework in terms of some of the deficiencies that come along with a lot of corporate VC investing, and had found a structure that was very much independent and cut out with or did away with the perceived problem of lack of focus. Because the stereotype is that corporate VCs flip-flop between pursuing strategic targets and financial targets, and that in between those two, they become very, unreliable investors, as perceived by other VCs, but also founders. And so what Commerzbank said is, we understand that, firstly, we need people with a lot of background in early stage investing. And secondly, we also understand that it has to be a financial only focus. And that has served us really, really well. So there's no strategic agenda in the investments that we make. And it's a pure play financial setup. And yes, please.
You've been a partner in VC funds, obviously now at CommerzVentures since 2014 and before that elsewhere. What's been your best ever investment and what was your worst? And I would really, really love for you to please name names, especially for the worst.
Okay, the best one is easy. We were early backers in Marqeta, which IPO'd at 10 plus billion valuation last year. And that was an investment that, followed really a very crisp and clear investment hypothesis, namely that card issuing processing was a very traditional old industry, and that working with the software stack of that industry was very hard, complicated, and only available to the biggest of companies with deep pockets a lot of time, and that rewriting the software stack for that industry and making it accessible to developers easily could lead to a big outcome. And that was really modeled after another company called Twilio that followed a similar logic in another industry. So that one worked extremely well for us. And we're extremely proud to have backed the company in Oakland at the doorstep of the biggest VC brands that are out there. And we were able to do it from Germany and take a meaningful stake in the business. The worst one was also a lot of fun at the same time. In 2009, I backed the A round in a company called SoundCloud in music. And that company had a lot of traction in the sense that they were signing up consumers at a very rapid pace. But everything took a lot longer. They were struggling to work with the rights collection societies. And ultimately, they had to restructure, which sort of damaged the economics for some of the early stage investors, which was a very painful experience to go through. So fantastic business. It's just that it took longer and took more capital, which damaged some of the economics.
Well, I think many investors would probably be only too happy to have, one of their worst investments to be a company that people still know about, and if I'm not mistaken, still use today. So I guess it could have been worse. Certainly, others would have had worse experiences. But look, away from the investment side of things, obviously, there is more to life than work. I understand you're a keen cyclist and mountaineer. Does this help you kind of escape the rigors of the investment world, or does it give you more endurance when you're working on tough deals?
It certainly helps me to keep balance in life because, I'm spending many hours on a bike being able to think, reflect, and also learn. And podcasts come to help. And I've learned a great many things that probably I wouldn't have found the time to do otherwise had I not been cycling. So yes, it's an important thing in my life, and certainly a very positive influence.
Okay, and the same goes for the mountaineering as well?
Totally. Yeah. I've been an avid rock climber, which I eventually had to give up for health reasons. But being focused, being competitive, being ambitious is part of what I am as a sports person, and I certainly carry some of that into my investing.
Okay. All right, so look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we are going to continue our conversation with CommerzVentures managing partner, Stefan Tirtey. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now Stefan, let's talk, a little bit about the future of finance. We talked already about CommerzVentures being independent of Commerzbank, even though it was, the German bank's idea, I guess, to put it together to begin with. How have things changed in terms of when things started and when you became kind of properly independent. Did you find that your hands were a little bit tied beforehand, like perhaps more of a strategic investment side of thing, and that now kind of you're much freer just to kind of invest in fintechs and now climate-related fintechs on their merits? Did things change markedly when the fund became completely independent?
No, I don't think it did. There were internal reasons that led to the spin-off, but I wouldn't say that we changed the way we operated at all. It's been a very solid and trusting relationship between us and the bank, and we're very grateful for the almost 8 years of partnership that we've had, which is why we decided in the end to raise our third fund with Commerzbank again, even though, given our performance, we probably would have been able to raise with external LPs easily. So it's a working model that gives us a lot of freedom and autonomy, and obviously worked for the bank as well.
And when it comes to the fintechs themselves, and I guess this is more of a general question, which I guess you've got a good insight into, do you find that fintechs are happier having, legacy banks or big financial institutions as their investors, either directly or indirectly, or can it hamper VCs paradoxically to kind of, do those deals because they don't want to be backed by these big legacy banks who may turn out to be their competitors or whatnot? How do you see things through the prism of the fintechs that you're kind of looking at?
Well, it changes over time, right? When we started, we were either mistaken to be a strategic corporate VC, or people looked at us as individuals, having been in VC for 10 plus years at the time. I think over time, what we've hopefully managed to make clear is that we behave much like any other financial investor, but we happen to be backed by a bank. There's still occasionally a company that takes issue with the Commerz being in our name, but there are other companies who quite like to be affiliated with the brand, right? But I think in general, we're being seen as a specialist investor who gets fintech with a great track record and a great set of people that then also happens to be backed by a bank, but that sort of has become a non-issue. And in that way, I think we mimic the trajectory and development of many other successful VCs. If you think of HV Capital, which was spun off from Holspring Ventures, or from Holspring, the publisher, and even Partech, has its origin with, I think, Paribas. So there are many more examples of that, and I think we're following that same trajectory.
Okay, we touched on this slightly before. We know that inflation is surging, interest rates are rising, tech firms, big and small, are kind of being hammered, on public markets and perhaps to a lesser degree on private ones. How has this changed the calculus, if at all, for investors looking to put money into fintechs, if at all? Is it now like there must be a much shorter or obvious path to profitability? Is it different sectors are now becoming more appealing? How has your outlook changed, and perhaps fintech investors' outlook changed, given what's going on public and private markets right now?
Elliott, since we started, I think, other than the severe market correction we saw at the end of 21, things have changed dramatically. When we first started investing, we felt the markets were expensive, and then we were buying at fintech deals at high valuations. In hindsight, 7 years back, some of those valuations seem very affordable. So over the last couple of years, we've seen a lot of new people coming to invest in fintech. And so obviously we have to think about, okay, what is the next thing, right? Where is less competition? What are the new themes? And we've been very successful in identifying those new themes early on. We were very early to identify Insurtech as a new trend around 2015-16, and made a number of investments in that space. More recently, we were also very early to spot that there is something happening at the intersection of financial services and carbon reduction. So that's a new theme that we're pursuing very successfully. We call it climate fintech. And more recently, we started investing in Africa. So that's a third theme that we're exploring, going away from just the plain vanilla fintech and insurtech deals that we've been doing so far. So we take new type of risks associated and related to some of our core competencies that we've developed over the last 8 years. And we do hope that we will be rewarded for taking those new types of risks ahead of everybody else.
You mentioned the climate-related fintechs and Climate View and Doconomy. How important or big an area of fintech do you think this is likely to be? Is this the kind of the next big thing? Is it going to be a niche? What's your take?
Well, I think it can be very big and lead to very big outcomes, because what we are seeing is that capital streams in the hundreds of billions or even trillions are being reallocated at the moment, for one. Secondly, almost everything we do in life that has a carbon footprint also has a financial footprint. So at the intersection of those two trends, we feel that there's a lot of value to be generated. And we're looking to find and back the emerging leaders in that space.
Okay. And I mean, you've mentioned climate fintech, you've mentioned Africa. Would these be your kind of, if someone were to ask you what are the kind of the two areas of fintech that are getting you most excited right now, would those kind of be, in terms of industry or geography, would those be kind of your top two?
Yes, I would add a third one, though, which is DeFi, decentralized finance, which is the idea of moving financial services from a centralized architecture to a more distributed architecture. That is an emerging space which holds a lot of promise. It is early days and fraught with a lot of risk. It's also fraught for traditional VCs with a lot of challenge in terms of how you invest, the type of investing, the structures, etc. And on the other hand, it's a space that if you are a fintech investor, I think you cannot afford to be not in that space. We've made some early moves at the intersection of fiat and crypto. We were early backers in a company called Curve, in a custody provider that was acquired by PayPal. We had some early exposure to the crypto space through eToro, and we're now looking to move more into the DeFi side of things, and we can also invest into tokens and DAOs. And so that's one of the emerging themes that we're looking to explore in Fund 3. And between climate fintech, Africa, and DeFi, we expect to deploy about 40 to 60% of the new fund in those new spaces.
Okay, it's almost like you've seen the order of my questions, which you haven't beforehand, because my next question was going to be specifically about Web3, crypto, and DeFi. And interestingly, I think I saw, and again, I know you're an independent fund, but with Commerzbank as your sole LP, I see Commerzbank applied for a crypto license earlier this year. When you see big financial institutions embracing this space, does this just kind of merely reinforce your thesis that this is going to be kind of one of the next big things?
Totally. And to your questions about reading your mind, I am being paid for predicting the future, right? To figure out what's big in 5 or 10 years' time. So hopefully I get it right sometimes. And in terms of some of the data that we're seeing, absolutely. I mean, we've seen it before, right? When we backed Mambu, which was selling core banking systems in the cloud, some people ridicule us and say, listen, regulators will never allow core banking to move into the cloud. But we said, well, every other sector is doing it. So eventually, this is bound to happen. What we're now seeing with crypto and then potentially DeFi is that the two worlds are rubbing shoulders at the moment, which creates friction points. And I think tech can play a big role in helping those two worlds interact more efficiently.
And I mean, just more generally speaking, I mean, there was obviously a lot of buzz around crypto and NFTs and the like in 2021. When we look back at the 2020, 2021 pandemic notwithstanding, of course, will we look back at it as a kind of golden era for fintechs and investing in the space because there's record amounts of money being raised, or will we come to see it a bit like maybe like the dot-com boom and bust that we saw in 99 and 2000?
Well, I've seen a few cycles, right? And the last cycle has been a very long one. I came into VC in 2001, and suffice to say that 2002, 3, 4, 5 were grim years, but they were also great years for investing. The last 7 years certainly felt like the most happy days in European VCs that I've come across. So it was a very rewarding time to be in VC in Europe. I see a lot of recent joiners in startups and VC who've only seen the good times. And I think some of those maybe expected for those times to continue. We, for one, felt that eventually this cycle will come to an end. And so we've been building significant reserves, knowing that eventually we might have to protect the portfolio. How history will judge that period in time, I don't know, right? It's hard to predict whether the current environment is just sort of an air pocket that we go through, or whether it's permanent. What we're seeing right now is that, especially in pre-IPO late stage rounds, the valuations have come down significantly. We see that crossover investors are being less active and either moving to seed stage like Tiger, or moving back to investing into public stocks. I think rounds at seed and A are still happening at a relatively rapid clip. It's more the B and C rounds, especially companies that haven't reached breakaway velocity quite yet, but are already fraught with a significant burn rate that struggle to raise financing at the moment.
Okay. So look, Stefan, it's time now for our rapid fire question round. Are you ready?
Fire off.
Okay, so we've got 90 seconds. I'm going to time it, and just one-word answers are absolutely fine and preferable. Here we go. So most successful fintechs we know are kind of very well funded, but many are still losing money hand over fist. Is this fine for now, or something we should worry about?
I think we should worry about it. I think there's virtue in good unit economics.
Great. What fintech segment has the biggest potential over the next 5 years?
Climate fintech.
What is the biggest pain point in your everyday financial life that you'd like to see resolved?
The acceptance of card payments or contactless card payments in Germany.
Do you think we're at the beginning, middle, or end of the fintech wave?
We're right smack in the middle of it.
Do you have a metaverse strategy?
We don't.
Do you think EU and US regulations have adapted enough to handle the new possibilities and behaviors we're seeing in the financial industry?
We're going through waves.
How would you describe NFTs? A scam, B, an interesting concept, or C, part of the future that we really mustn't miss out on?
I'm still figuring that one out.
Have you ever invested in crypto?
Yes.
I guess you've already answered that. Are physical points of sales part of the future of finance?
Potentially.
On a scale of 1 to 10, 1 being the lowest, 10 the highest, how would you rate the chances that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
I rate it a 10,
Between 1
but
and 10.
not in Europe.
Okay. CBDCs become a mainstream reality in the US or EU? Oh, we are out of time. I'll let you answer that one. Do you think CBDCs will become a mainstream reality in the US or EU out of 10?
5.
Okay. Great. Well, I'm afraid we are out of time. We almost got through all the rapid fire questions. So I really just want to thank CommerzVentures managing partner Stefan Tirtey for joining me today.
Thank you so much, Elliott. It's been great being with you.
Thanks for taking the time. And we will be back again next week with another big name from the world of finance and technology. We do hope that everyone watching will be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Bye-bye.